Aloha investors. My name is Everson, your host for today. With me we have Patrick and Max. Welcome to today's show. What an awesome week we had. I was wrong. I know last week I said that I thought that the market would go down at least 5 to 10 percentage points, but that didn't happen. And I did set myself up for success. I traded out on, I think I traded out on Tesla. Big mistake. Which brings us to our topic today is Max and Patrick's favorite, Tesla. We're going to talk about the electric car companies. I do want to mention a disclaimer before we get started is just take these shows for entertainment purposes only. Remember that there's always a risk to trading. So trade wisely. Make sure you set up your risk management wisely. Or without further ado, let's talk about the electric car companies. Now, Patrick, I want to start off with you because you have the most ammunition, I feel like. You just recently did a podcast featuring a lot of these tech stocks. So why don't you give us a little update about that and maybe even talk about your podcast?
Right. So, Tesla has been absolutely nuts this week. It's really difficult to imagine the growth it has had. They made me look not great a few months ago when I claimed that they were very overvalued, right?
Right.
And I still believe it, but at the same time, I came around since then. They do have great technology and they have good products, but I'm still it's hard to wrap your head around it when Elon himself on Twitter had said at $800 that the stock was too high, right? Well, now, what is it, like a month or two later, the stock is almost double that price. So that's very interesting. We'll talk about it more during the show. The stock that I really paid a lot of attention to this week, and I made a video that's been, being seen a
pretty
lot
viral.
lately. About a company called Helion, which is being merged with a shell company called where the stock ticker is SHLL. And that's been seeing a lot of attention too. And then we'll talk about some of the smaller ones too, but the landscape is getting a little bit more crowded. One of the SPACs that are going to be very interesting to look at this week is the stock ticker is SPAQ, SPAC, and they're rumored to be merging with a company called Frisk, which the designer is very well known and very reputable. So that's going to be pretty big this week.
Is that a car company as well?
Well, the SPAC is actually a shell company that, is ready to merge with a private company. So if they bring Frisk into the stock market, then it's going to be available for everyone. So right now, last week, there's been a lot of, SPAC, the shell company that's listed on the stock market. It's seen a lot of growth just because people are speculating that this is going to be the acquisition. So we can probably expect that next week there's going to be a lot of movement too, especially if the rumor is confirmed, because right now it's just rumors. But they're getting pretty close to their deadline because the SPACs only have a certain amount of time to, determine a company that they're going to merge with. So the closer you are to the deadline, the more it starts to be like a race against the clock. And that's why there's so many rumors right now swirling around it.
So, and each of these stocks now, we got Nikola, we have the Shell, we have Tesla, right? Each of these stocks, or each of these companies rather, they're producing different types of vehicles. As we know, Tesla is ahead of the game. They had a lot of government assistance and whatnot. Nikola is a new company. It's probably one of those companies that a lot of people don't like. Why don't you express some of your feelings about those? What's the difference between all of these? And out of all of the brands, which one would you recommend, Patrick?
Right. So, it's undeniable that Tesla is kind of miles ahead right now in terms of not just the technology, but they have 50,000 employees. They're well ahead in terms of infrastructure of the company and everything.
They're in
and they have
three different countries.
Yeah, and they have the gamut of products, right? They're doing the automobiles, but they're also going to have the semi and everything. Helion is focused only on tractor trailers, class 8. Same for Nikola. So like these three are going to be competing in the semi category, but not in cars, right? And then you have Workhorse, which is doing what's called the last mile delivery vehicles, which Everson, you might know more than us about, which is it's the type of little trucks that the postal service uses to bring packages to people's house. And Everson, you've been talking a lot about it with the drones that are going to be doing deliveries. That's what Workhorse focuses on. And then you have the really, really small companies like Solo, which is just, starting out. It's not really well known yet. So
Nikola is just a plan on paper. Although they do have a physical truck that had been built, they don't have a manufacturing facility as of yet, from my understanding. Workhorse, it does have a manufacturing facility, and UPS is one of those companies that's looking to pick up some of those products. So we'll turn to you, Max. What's your take on all of these, and which is your favorite company? Would you favor?
You're really going to put me in that situation to talk about. So I'm just going to cut to the chase and say that my favorite is going to be Tesla, and I know that will shock you guys, but when you're looking at the different technologies,
you got to tell me that again.
Okay, so I'm going to say word for word, my favorite out of the basket that you provided is going to be Tesla. So, there are some good plays that Patrick mentioned to get some good returns, but Tesla is still the best. And there is that saying that says pioneering don't pay. And so Tesla was the pioneer. But the thing is, today is the third iteration of Tesla. So they failed multiple times and they were able to come back to life. So even though they are the pioneers, this iteration that we're seeing today is not the original that failed a couple of times. So now they have a lot more capital coming in. Their brand is phenomenal. But the biggest key is not the battery technology, which is superior than anybody else. It's the autonomous driving technology. And that is why it's the number one stock in this sector. And so, sure, maybe Helion and maybe Nikola will be able to provide a similar vehicle, but their vehicle is not going to be able to drive itself. And so the entire industry of semi-trucks, they're having a hard time finding drivers. Well, now they won't have that problem. They're going to have drivers that won't be limited by government on how many hours they can drive consecutively. They're going to reduce their cost because a driver is very expensive, $80,000 to $120,000. And so it's going to be really interesting to see how Tesla with autonomous driving is still going to be superior to anything else out there. And that's not even talking about the product and the quality of the product, which Tesla is still superior.
I did hear that. What's that, Patrick?
Arguably, right now, the vehicle that someone purchased in 2012.
But the specs on the semi are not great. You have to admit that.
Okay, well, so what's Elon Musk about? He always likes to under-promise, over-deliver. And so your company, that you're attached to with Helion, they're going to try to over-promise. But we'll see if they can actually meet that promise, because right now they're trying to raise the capital that they need to push forward. Tesla doesn't need to. They're like, hey, you know what? This product's going to be a B product, so I'm going to be that great. It comes out and it's an A product, A-list, So that's just how Elon Musk has done it the entire process. Hey, it can only go this much mileage. Well, it actually usually gets another 10-15% bump. Hey, this is only the torque. It's actually going to be better than that. And then they say, hey, our vehicle can only do 3 seconds for the half mile, quarter mile. And it turns out they did it in like 2.9 or whatever. So always under promise, over deliver.
Well, isn't that how it was with Elon Musk too when he first started Tesla? I mean, he would promise the world, but he couldn't meet the results that was asked of him. So we saw for years and years and years, which is why the both of you weren't, buyers of Tesla at the time, and I've always been strong on Tesla, just knowing what a genius Elon Musk was, just basing it off of that. But you know, it's the same thing that we see with companies like Nikola. You know, they're over-promising. Can they deliver? So, which kind of brings me to my next question. What do you think would be the before I move on to that question, I did want to say that regards to like workhorse and all of that, regardless of the automation driving, I think that the regulators would still, in between this process, have the same DOT specs that they would on just, you know, attentive drivers, non-automation, only because you still, it's not a guaranteed that it won't fail. I mean, you have some dead spots. We don't have 5G fully up and running yet. So you'll have some dead spots that may occur when you're driving an automated vehicle. So you want your drivers to still be attentive, and you still want them to be able to get their designated hours of sleep. So I think that
So Google found a shortcut for that. So the way Tesla was trying to approach a problem is, hey, we're going to have all these sensors that can actually react on the fly on what's happening around it. And what Google was like, hey, you know, Tesla's going to do their thing. We're not going to spend that much money on this research. So what we're going to do is, since we're actually mapping all the roads in the US, we're going to have our driving based on the information that we're collecting. So Tesla actually noticed that that was a lot cheaper and currently more efficient to do. So Tesla's actually moved their imaging to current satellite images instead of reading the environment live. So they're not going to need satellite information and that kind of stuff anymore, because it's all going to be in the vehicle.
Well, it'd be interesting though, because I mean, you would still have to be aware of your surroundings. For instance, if there's pedestrians that walk through, or if a car suddenly stops, or you know, conditions like that. I know that when those cameras get dusty and you don't clean them off, they can misread. So that's going to be interesting to see. But I want to move on to the next question, which is, what do you think the worst company out of these would be? I mean, I don't mean to be obvious, but I think it might be obvious. And why would you think that it'd be obvious? And do you see it going down? Do you see it disappearing?
Yeah, I'll start. I mean, the problem with a lot of them is the valuation, and that's the problem. Is unless you discover them before people start really like hyping it up, it's very difficult to get into them, because they become an evaluation where the deployment needs to be perfect for it to make sense at the price that they're listed at right now. And that's why I don't like it. Like what Max talks about with Tesla is the holy grail. I mean, I hope it happens, right? But that's not a done deal yet. And risk versus reward wise, I mean, Tesla has a valuation, what is it now, 250 billion-ish, with the stock at 1,500. As opposed to Helion, which is a much smaller company, right now has a $3 billion valuation. They already have a product that they're working on. What they do is they send a truck to the shop, they install their OEM system, send back the truck onto the road, and now it's an hybrid, right? So it makes it very easy for companies to test it out and try it. You know, it's not the full product, like completely battery operated, but it's a good transitional product that gives them some income, and also at the same time they develop relationships, they get a lot of data for their software. So that's one of the main reasons why I like this company. They're still small, and the valuation is so low compared to Nikola, which is at 20 billion. 3 versus 20. One of them has a product on the road and, you know, a lot of partnerships and everything. The other is basically a business plan. And that's why, to answer your question, like openly, to me, Nikola is by far, out of all these companies, the worst risk versus reward. When it was at $10, you know, you can buy into the concept. But when it went to $90, and then now an analyst just set it as a buy at 45. Right. To me, it's mind-boggling. I mean,
Well, it's not just one analyst. You got a number of different analysts, right? You had Barron that made it a buy signal.
Right. So my point with that is that the
signal.
consensus is that company is worth 20 billion, right? And they don't have a product, and they're going to be approaching mass production in 2023. Meanwhile, you have Helion at 3 billion that already is a product and is going to start deploying it to their partners, testing and everything in 2021, looking to do mass production in 2022. To me, like, which one is the best risk versus reward? I mean, it's right. The answer is obvious.
Well, I mean, this kind of puts it into perspective because, like I said, this is the exact same route that Tesla went through. Exact same route. They had a product. They couldn't deliver on the product because they didn't even have a facility to be operating off of. But at the same time, they promised that they would be able to deliver a product, and they executed on that. I think that the banks and institutions, they see the value in it, and because look at it. They got jet skis and ATVs and all of that little fun toys, right, that you could purchase. Those would be easy to make. So I think that, they're choosing these products that are easy to make, and they're on the books for Tesla. But Tesla isn't going to work on them because they don't have the right facilities to be able to operate on making those. I think Tesla wanted to make bikes, sports bikes. It's going to take them a while.
That's the funny thing, is that those are all like cool ideas, but start with making one product and then, expand your line to like the jet skis and all the other stuff. Nikola can't even start making one product. Max, I saw you were reacting a lot. Like, what were you going to say?
No, so I mean, we're fighting all over, which one's the best, which one's the worst, but the entire industry is the worst. And I know that's going to be shocking because a lot of, rookie investors jumping into it, but the entire auto industry is shrinking. And so, now people are going to have a lot less money, so they're not going to buy the next vehicle. And if you're driving through by dealerships, they're not giving amazing deals, even though their sales are down. So it's going to be a lot harder to put new vehicles on the road. People are going to keep their car maybe another 2, 3, 4, 5 years. And right now, a car that you own is being used less than 5% of the time. Less than 5% of the time. And so as we keep moving with new technology and with Tesla autonomous driving, a car is now going to be used in the community. And so, hey, you just need a ride to work. Boom, you jump into the car. Boom, you 20 minutes, you get dropped off. And then that vehicle is going to go pick up someone else and bring them to work. And so a car now is going to go from 5% to possibly 80% usage. And so now you're going to reduce the amount of cars on the road by about 40 times. So you guys are fighting on which is the best company, which one's the new one, but that entire sector is diminishing as we're getting better products, we're getting some massive bankruptcy problems, and better technology.
Yeah, but none of these are competing with Tesla in that market. Now you're talking about Tesla versus Toyota versus like Hyundai. That's a totally different argument.
They're all vehicles. You want a vehicle, you have to choose. Do I want a Tesla? Do I want a Toyota? Do I want a Celica? Whatever it is. But that entire sector is shrinking.
I'd have to agree with a part of it. It's only shrinking because not a lot of people have the income. But at the same time, you have car companies that are offering pretty good deals. I mean, at the open, Ford had offered 0% interest in some of their vehicles, and that had actually boosted a lot of their sales. So you have car companies that are still making deals. I don't know how the books look like as far as sales is concerned, but I think that the money is being diverted to no longer support gas vehicles and is being invested into the autonomous driving. And I think autonomous driving is going to be the next big tech boom. But it's going to be a saturated market. I mean, everyone's looking to produce this autonomous driving vehicle or an electric vehicle. And I think you're right in that sense, where we're going to have to start to shrink that industry because you can only have so much players.
All right. So I'm reading a live chart of 2020, and the average reduction in sales is about 25% across the board. So they're selling about 25% less vehicles. I'm telling you, the entire sector is diminishing.
Oh, yeah. No
And so
doubt.
even though
With the
Tesla
virus,
is going to
yeah.
gain some, and it's more than the virus, but even though Tesla is going to get some market shares, it's going to be gaining some market shares in a diminishing sector. So to me, if you're going to be directional trader, if you're going to be delta trader, it's a lot smarter to go to a sector that's expanding. And like we talked about, your JD and Alibaba, Amazon's doing really well. That sector is expanding because now people are traveling a lot less to purchase something. They're just going to have something delivered to their home. That to me makes a lot more sense because even if you don't pick the right company, that sector is still going to expand.
I like this transition. We're going to transition out of the tech industry and automated driving.
Wait, Everson, what's your pick? You ask us what our pick is. What's your pick?
He's agreeing with me.
He's the Nikola guy, so come on. Tell us everything about Nikola.
All you got to do is go back on a few more podcasts, and you'll find out that I've always been a buyer of Tesla.
Yeah, that's true.
Even when you guys weren't a buyer of Tesla, I've always been a buyer of Tesla. I would sell puts on Nikola. I would sell puts, but I would be very careful with that also because Nikola has big institutions that are backing them up. So
wait, you would
don't
buy
lose.
Puts or sell puts on Nikola?
I'd buy puts.
Okay, yeah, all right.
Because I've made quite a bit on puts with them. So I'm gonna be stern as a buyer on puts with Nikola, but I like Tesla. I've always loved Tesla. So I see Tesla at some point going to 3,000.
I need to mention something because it's not well known. One of the reasons why there's so much pressure, right now it went back up, right? But one of the reasons why there's so much pressure on Nikola is because they have a lot of warrants that are going to be activated, which dilutes the shares. And that's why it's been getting crushed in the stock price. I don't think a lot of people understand why the stock price went down.
That's good. Yeah, that's good. So with that being said, that puts is going to come into play pretty well when they start to dilute the market. I wanted to transition real quick. We have maybe about a few minutes, and I wanted your take, both of you. We'll start off with you, Max. What do you think about Costco versus Walmart, and what would you say would be the best of breed? What would you go with?
Okay, so I mean, I'm just going to look at the chart for Costco, and so you can see that it's broken its all-time resistance, right? So now it's a new territory, and so what I do is I measure the height of the channel, which is about 30 points, and I'm going to add it to it. So right now the current price is 326, so add 30 points to that. It's going to be 356. That would be where I'm projecting Costco to go. So that looks very bullish. That looks good to me. And if I go over to Walmart, Walmart is not, it's close to the all-time high. Is it the all-time high? Let me zoom out. Yes, it is so it's getting close to that point, but the thing is it hasn't broken it. So that looks pretty good, but Costco is going to be the better play right now just because it broke that all-time resistance. But just to be mindful, even though Costco's done really well in these tough times, Walmart's right behind them. The problem is if things get worse, the amount of shoppers at Costco is going to drop a lot more than the shoppers at Walmart. So Walmart, if things get worse, would be the much better play.
How about for you, Patrick? What's your take on it?
Yeah, I mean, I think Costco is very good too. And I mean, they've been beating all of their metrics that they were looking for. So I think that Costco is really good. The one thing, though, that it's just that it's a company that everyone knows about this already. So that's why, like, it doesn't have, like, it might keep growing, but I don't like when everyone knows about a company that's good. Like Kramer pumps it on his show like literally every day. So that always worries me because, you know, I feel like the price gets stretched a little bit. But they're both good companies, but it's not for me.
So I'm sort of biased with Costco. I like Costco. One thing that I have to say about it is that they have a high level of debt, and they had some significant inside selling over the past 3 months, which could be a good thing. But their forecast growth is earnings for about 8% or so for the year, right? So I think they still go higher regardless of circumstances. But folks, that's all the time that we have today. I hate to end too abruptly, but we've enjoyed this podcast with you all. And I hope you folks have a great trade week and end up on the green side. Take care, guys. Aloha.